the tone was positive, and we could see that on every dip, we were seeing some buying interest emerging. The good part was that on the sectoral front, on the broader markets front, the positivity continued. So that is the reason why you didn't feel much that the index is not participating, because the broader markets, especially the mid cap and small cap, they have done exceptionally well. Talking about the sectoral performance, as you can see on the left hand side of the table, that realty, media, auto, financial services, and energy, they were among the top performers. IT and FMCG, they were slightly on the back foot. Defensives were slightly on the back foot, witnessed some profit taking during the week. Talking about the gainers, Shriram Finance tops the list among the top 5 gainers from the Nifty 50 basket, followed by Ultratech, HDFC Life, ONGC, and Cipla. At the same time, for the obvious reason, because the sector was under pressure, so HUL, Infosys, Tata Consumers, Kotak Bank, and ITC also, witnessed some profit taking. So this was the overall, summary of the week when it comes to benchmark sectors, top 5 gainers, losers. Now, what we are anticipating for the next week. So this is the daily graph of Nifty index. So as we all know that this, election move followed by the recovery. So we were anticipating at the beginning of the week itself that there could be a bit of a breather now after such a volatile week. And that is what we saw. The reason behind this showing this daily graph is this, that there was hardly any movement when it comes to the Nifty, but all the movement happened above the upper band of the channel. So this is positive, that the tone was positive throughout the week, despite the volatility. So it's more of what? It's more of time-wise correction that we see. So markets correct in 2 ways. One is price-wise, when we see moves like this after an up move, right? Other way is that you hardly see any price-wise damage. You just go in a range and then you consolidate and then you resume the trend. So that is what we are seeing so far. Now, what we should do? There's two scenario. One, that there could be some profit taking. The next week is a holiday shortened one because Monday markets are closed. So we'll see the reaction now on Tuesday. So one thing is that we may see a dip. So in case if there be any dip around 23,000, 23,100 zone, it's a good zone to look for positional longs when it comes to the index. This is what charts are indicating. First, that is the area of support, and next, of course, this 20 EMA, which is around 22,800 now. So earlier it was at 22,600. There was a make or break. Now it has shifted to 22,800. But for fresh buying, 23,000, 23,100 zone is a very strong support area. What if we hardly see any correction from here on the way we are seeing? So in case if we close above 23,600 now, not the way we are, inching higher right now, means there's hardly any pause or, any decisive move. We need a decisive candle, at least, nearly a percent kind of a up move, or, market opening at day's low, ending at the day's high, something like that. So if we cross 23,600 in that manner, then 24,000 is something that market's going to be testing soon. So in both the cases, whether we see a dip or whether we see the continuation of the trend, bias is on the positive side. So one should be looking for buying on dips opportunity. Now, banking. So instead of a daily graph in banking, this is the weekly graph, again, for the obvious reason that where are we, where, banking index may approach. So again, for, after a very volatile week for the banking index, this week it was a muted one, almost 0.5% kind of a gains. Banking is taking its own time, to make move. So the top gainers, the top contributors, Axis and ICICI, they were all slightly on the sideline. It was SDFC, which is seeing some catch-up move, or IndusInd Bank, Kotak is still struggling. So within the private banking space, we are not seeing decisiveness. At the same time, there's hardly any correction also. It's more of like consolidation phase in the private banking majors. Yes, PSUs are volatile, and that's the reason why last week itself we have recommended to avoid PSUs for time being. But private banking majors, they are just seeing normal consolidation. So we feel that banking has potential to do well from the current levels. 50,700 to 51,500 is something that it might test. So that is the upper band around, the next week around 50,700, 800 first, and then it's going to be the next hurdle. Downside, in case if we see any dip, then 49 100 is a new base now, and then 48 600. So for banking also, we feel that it's a buy on dip market. Preference should be given to the private banking majors, especially the performers, the top performers. So Axis, ICICI, SDFC, IndusInd Bank, they are the one basically which are contributing to the move so far. Yes, there are certain other names also like Federal Bank, wherein there was hardly any correction during the phase. Then we have bank like RBL, which is also getting some traction, though it's an underperformer. So after uh, Bandhan Bank, the stock which couldn't perform was RBL, but now we have started seeing a bit of a sign of reversal. So one should keep a close eye on that. But yeah, the preference should be given to the top names which we've discussed. Now let's talk about stock specific. So first stock that we have on the list is Apollo Hospital. So here, what is important that we are still seeing broad indices doing well, and certain pockets, specifically agri-related themes like agrochemicals, sugar, but they are highly volatile also, and they have already seen a very strong move. So yes, they might continue to attract buying interest, but here maintaining a better risk to reward is something which is critical. So one stock wherein we have seen fresh base formation is Apollo Hospital. As you can see in the graph itself, post this consolidation range breakout, there was a retracement. The stock spent around 5-6 weeks around that area, and now we are again resuming the trend. So here the risk reward is favorable. We have decent base around 58,000, 5,800 mark, and the upside we have significant room towards 6,800 or maybe higher. So this is one stock that can be on your radar for the next week. Next, Kenfin Homes. So Kenfin Homes we have discussed earlier also multiple times, but again it's been spending, and by the way, it's a monthly chart. It's not a weekly or a daily chart. It's a monthly chart. So as you can see that it's been almost a year now that it's hovering in a very tight range. We have anticipating that there could be a phase of breakout here, but couldn't sustain. Again, this week is a decisive week, as you can see that among all this month so far, this month as of now it's holding strong. So we are anticipating that almost a month, year-long consolidation is likely to end in Kenfin Homes, and it could trigger a strong directional move from the here on. So this is one counter which one can look for accumulation after this year-long consolidation. Last on the list is JK Papers. So it's among the cash segment, and of course for the obvious reason because the stock was in range of 440 to 320 range for almost 8-9 months, and now this week it's a very decisive close, almost 20% kind of a gains. And look at the volumes, very decisive volume price action. So this indicates that the tone is set for the next leg of the move. The consolidation is over. This is one stock which can be considered for accumulation in the coming year. So just to sum it up, our view on the index is positive in case of a dip towards 23,000, 23,100 zone. It's a good buying opportunity. 22,800 is the major base. Upside once we close and decisively sustain above 23,600, 24,000 will be the target area. Similarly, for the banking, we anticipate this prevailing tone to continue. 50,700 to 51,500 is something that we are eyeing. On stock specific front, we talked about Apollo Hospital, we talked about Kenfin Homes, we talked about JK Paper. So all three stocks wherein we have seen decisive close. So this is all from the presentation part. Now we'll do a quick feedback poll, and then we can start with the Q&A. So please fill in your feedback, and then you can start posting your question using that Q&A tab. Please quickly fill this feedback so that we can start with the Q&As. And if you are done, you can start posting your questions using that Q&A button in front of your screen. Right, so done now. And we have questions also lined up. So let's start. Mr. Ashok, you can write your query using that Q&A button instead of using that raise an option button. Okay, so first question from Mr. AR at cement sectors for next 2 months. So yes, cement as a pack was under limelight this week. We saw decent performance from all the cement majors, specifically Ultratech. We expect this tone to continue in the coming weeks also. But yes, since we have already seen a very strong surge, one should be strict with the stop losses on rise if it's a short-term trade, especially for the next 2 months, because since we have already seen a very strong surge. So Ramco, like it's been a phenomenal run in Ramco. Then we have Dalmia Bharat also, which is seeing traction. So be selective now, and I feel that among all the names, Ultratech looks comparatively stable because it hardly witnesses the kind of volatility the way the other stock usually do. So Ultratech is one such name from the cement space which one can consider for accumulation on dips. Okay, and I request please not to post stock specific queries because then it would be an unending session, and we wish to end this session in next 15-20 minutes so that we can have a fruitful session in just half an hour time. Okay, next question on the FMCG sector. So FMCG sectors broadly, the tone is positive. It's just that we had a very sharp move, of late, and that's why we are seeing a bit of a consolidation and some profit taking also at the higher levels. But the tone for the sectors remain the same, that we are still seeing positivity continuing. Again, one needs to be selective in this space because ITC is not participating at all, when it comes to the FMCG majors. But rest of the counters, we are seeing buying interest in every dip. So be selective and at least maintain a view of 1 to 2 months from the current levels. Okay, next, Nirmala ji has question on chemical space. So again, like after a long period of consolidation, we have started seeing some traction in chemical space also. But we have had this kind of phase earlier also, in the chemical space, but couldn't sustain. So this time around, I would recommend that one should be not go overboard, because last time also after the initial up move, it fizzled out completely, and again we were in uh, sideways mode for last several weeks. This time around, in case if you are going ahead with long trades in the chemical space, be very selective and maintain strict stop losses also. Deepak Nitrate, Naveen Fluorine, UPL is also witnessing recovery now. Then we have from the agri-related space, Release India, wherein we are seeing decent traction so far. Okay, so Mr. Ajay Gupta has given a feedback. Thanks for the information. Thank you so much. And please give advice on FMCG. So FMCG we have already discussed, Mr. Gupta, and negative RSI divergence. So see, I personally follow the price action more. Oscillator indicators, they are just for the confirmation. So there could be intermediate diversions, but broadly what the price action indicates is that the reversal which you have seen in the FMCG space is here to stay. Okay, power sector, Dr. Urvisha has questioned, can we consider accumulating stocks? So again, you need to be selective, Dr. Shah, now, because we all know the kind of outperformance that we had within this space. And it's not going to be easy to reclaim those highs that we had before the election. So again, be selective. Some of the names which I mentioned, like JSW Energy, definitely looks comparatively better. Then we have stocks like Tata Power, wherein we are seeing stability. So be very selective in this space. Don't just go ahead and accumulate buy anything. Especially, my request is that stocks which have been underperforming post the election decline, please refrain from adding or uh, you know averaging those stock in case if you have in your portfolios. In fact, look for any rebound or reversal to exit, because if they are underperforming for some reason. So if the view is short term, please utilize recovery to reduce your position in the underperforming space. Okay. Mr. Deepak Thakkar has a question which is beyond this webinar, that SIP kaun sa kare. So, Mr. Deepak, if you are associated with us with Religare, you can just write to us, and the concerned team would share a list of mutual fund wherein you can initiate fresh SIPs. Okay, next we have a question from Daulat on need to know defense sector stock, book profit or hold. Daulat, we are again seeing traction. So if the view is short term, be strict with your stop losses, because we all know that these stocks can be very volatile, especially stocks like Cochin Shipyard, Mazgaon, GRSC, BEL, BHEL. So strict with your stop losses in case if you have any existing trades, and keep on trailing also on the rise, because we are not seeing strong volumes during this recovery. Means the price is not aligned with the participation so far. So be strict with your stop losses. You can continue or you can book partially. So Mr. Vipul, we have already discussed about defense sector. So again, those stocks which are not participating now post this decline. So there could be some reason for the underperformance. So if the view is short term, definitely you should uh, maintain clear risk to reward in place. And if it says that you should exit, you should exit. Okay, again, stock specific queries. Uh, so banking, we have already discussed, Mr. Jitendra Kumar, that Axis, ICICI, HDFC, these are the preferred names alongside with Federal Bank. Kotak is something that alongside with the PSUs that one should refrain if the view is short term. Yes, Mr. Sujoy. So I hope it answers your query on the banking. Mr. Lal, since you were late, it is okay. You can just go to our channel, Religare Online, on YouTube, and you can see the recording of this entire session. There's anonymous attendee that can deliver, provide training for the beginners and Religare application. Yes, we do. So you can just get in touch with us. You can send a query on bcare@religare.com and the concerned team member will connect with you. Defense sector outlook, Mr. Ashok Baba, as like we were saying that the stocks are doing well, means there's hardly any uh, dull movement for the defense names as well. But they are volatile, and plus, not all the stocks are recovering in a similar manner or trading in a similar manner the way we were seeing before elections. So be selective and be strict with your stop losses. See why I'm keep on reiterating my uh, advise that one should be strict with the stop losses because they react strongly, equally strongly on the downside when we see profit taking in the market. And some of these stocks are not at all participating in the recent recovery as well. So in case if they extend further and if we see any profiting in the market, people might tend to look to book profit in the sectors of stocks which are doing well to hold their position in the underperformers. So that might trigger some profit taking also additionally. So be strict with the stop losses in both the cases, whether it's doing good or bad. Keep on trailing your stop. Trailing means in case if the stock is at 100 and it reaches to 110, you bought it at 100, so your stop should now be at 105. So that the 5 point kind of profit that you already have 10 point kind of a profit, but 5 point is something that you have already logged in. So this is something that one should practice, especially in the market like this. Okay, so there were certain queries, though we usually don't entertain queries related to stock, but there are multiple queries on IRB. So IRB, I understand because the stock was, witnessing decent traction of late prior to this block deal. But since this block deal, the stock has been struggling. So for a time being now, I am not seeing any, decisive move coming in IRB. And in case if you have any position, 59 is the major support and immediate around 62. For stability or some recovery, we need a close above 70. So as of now, it looks sideways toward in the range of 62 to 70. And fresh buying, one should avoid. Adding to your loss making position is something you should avoid. And if the view is very short term, then 64 should be the stop. Okay, so since we had multiple queries on IRB, that's why we have answered this. Otherwise, we usually avoid stock specific. All right, so next is Ashish Jain on sugar sector and IT for the next 3 to 4 months. So yes, as like we were discussing that the agri-related themes were uh, almost subdued for last several months, and we have started seeing traction of late. But within this space, also one needs to be selective because when the cycle reverses, they are cyclical in nature, and when the cycle reverses, uh, the underperformers or the stocks which uh, fundamentals are not very sound, they witnessed sharp corrections. So within the sugar space, Balrampur is the best bet alongside with EID Perry, wherein we have consistency in the trend. And IT looks, yeah, definitely looks a bit to us. There could be a phases of underperformance every now and then, but in the next 3 to 4 months, at least from the current levels, you know, I won't be surprised that 5 to 10% kind of a move, up move that we see in the IT index and the IT majors. Okay, next we have Mr. Deepak on railways. So railways is not participating. So this is one space where one needs to be extra cautious because they are not participating in this recovery. And in case if they decline, they may see newer lows. So stocks, any stock which is not participating in the recent recovery, it means there's some reason that why they are not participating. So be disciplined means don't add to those loss making position at first place, and maintain some stops also. At below this level, I would exit. See why it is important to exit the losers, because it's two sides that you are losing. First, on the existing position, other is the opportunity loss. So if you take this step that yes, I accept this stock is not participating now, let's time to switch, so that you have some other stocks to invest in or trade in. Okay, thank you for the feedback, Mr. Gupta. Defense, we've already discussed. Okay, so next question from Mr. Vipul Bhatt, that which sectors to focus. So the sectors before the budget, by the way. So the sector have already started, showing traction. So usually the agri-related theme do well before the budget, and by the time we reaches to that mark, in fact, now couple of weeks or yeah, largely couple of weeks before the actual budget, we start seeing profit taking. So that is what we are seeing in agri-related uh, stocks as of now. So this is one thing which one can definitely look at. But since the stocks are volatile, high beta counters, one needs to be clear with that thing and invest or trade accordingly. के मेटल सेक्टर्स में लिए के बाय करने के लिए, तो देखिए मेटल एज अ स्पेस is still holding strong, no doubt about that, but it looks slightly in a mood of consolidation now. Though we saw that certain stock like SAIL, National Aluminum, and Copper, they were witnessing a bit of a recovery, but largely the sector is under consolidation. So I feel that when the tone is sideways for the sector, the top performing name like Tata Steel is something that one can look at. It's low, volatile, less volatile. Plus, we have stocks like JSW Steel, though it's volatile, but it's trading at the record high. So these are some of the names which one can selectively pick and choose in the metal space. Okay. Okay, Mr. Ashish Bhatia has a question on auto counter, but I'll just share about our outlook on the auto. So apart from the other key sectors, in fact, among all the key sectors, auto is one which is showing consistency in the trend. So and the underperformance that we were seeing in certain stocks within the auto basket, like Tata Motors, is also subsiding substantially. So we feel that there could be a bit of a pause and consolidation in between, but the tone is likely to remain positive. And M&M, Maruti, Eicher, Hero Motoko, Bajaj Auto, all these names are trading strong. So yes, one can continue to hold the quality counters which are in sync with the index, which are outperforming the index. Okay, again, IT industries, Mr. Rahul, we have already discussed. So BPYD, I doubt that there's any significant name in the listed space. FSL, I guess they are into some bit of business there, but otherwise, we don't have any listed counters. Yes, so Mr. Dinesh D has a question on sector like which is best, pharma or IT ETF. So if I have to bet, let's say for 1 to 2 year time horizon, I would definitely bet my money on IT. Why? Because there's a prolonged period of underperformance, but that is not the reason that one should deploy money. The challenging part, whatever we had, when it comes to the IT-related challenges, be it global and other things, it's subsiding substantially. Plus, we have the US election scheduled this year. So after this US election, and by the time I guess the clarity over the overall global economy will also be there. So we expect IT to outshine in next 6 to 12 months time horizon. So definitely I would bet my money on IT if the view is for over one year. Okay, sector. So auto sector, Mr. Joginder Singh, we have already discussed. So in case if you are associated with us, you can send an email to us and we'll revert, or you can get in touch with the branch and the business partner, and they'll also suggest you the stocks to invest. Uh, NBFC space, yes, it's looking upbeat. The biggest name, in fact, I would like to highlight Bajaj Finance has been finally showing sign of reversal after almost 8 9 months of underperformance. So one can keep Bajaj Finance, then we have L&T Finance, then we have Chola Finance, Kenfin Homes, Shriram Finance was among the top performers. So we have a list of stocks from the NBFC space which are looking upbeat. Okay. Yes, Mr. Dinesh, yes, we do provide training on the uses of Religare apps. So if you have any challenges related to this, uh, please write to us on vcare@religare.com, or you can get in touch with your branch manager, relationship manager, BP. They'll assist you with that, how to operate. And still, if you feel any issue, you can write to us on vcare@religare.com. Auto sector view, we have already discussed. Metals, we have discussed. PSUs, Nantaji, for a time being now, I would recommend to refrain aggressive bets in the PSU space. Selectively, yes, we are seeing PSUs also witnessing recovery, traction. So be it defense, banking, and otherwise also, but not the entire basket. The way we were seeing, like the PSU stocks witnessing traction across the board. So that's not the scenario right now. So be selective, and if especially if the time horizon is, let's say, for a year or two, then only one should bet for the fresh position. If short term, they might continue to trade volatile. So, Dr. Shah, we've already discussed about metals, so hope it answers your query. When to expect full budget? It's in the third week of July. Uh, Exchange and budget. Metal sectors we have already discussed. Auto space we have discussed. Uh, Snehansh, we have already discussed about that agri-related theme. Yes, one can look at Redis. Okay, what was your next question? Yeah, for any training for the trading also. So yes, means we have, when it comes to trader, we have multiple products to offer. So during the live market recommendations, which we share on both indices and stocks, then we have multiple products which we share with our clients for delivery buying, like Techstar, TechEdge, Midcam Battalion. So we have a whole list of product, Mr. Dinesh. So once you get in touch with the relationship manager, they'll explain you how to utilize the app and see where all these products are and how you can utilize them. Okay, what about power sector? We have already discussed. Uh, okay, so Nandaji, I've already answered that railways, they are underperforming. So uh, if the view is short term, and if you're still holding for less than a year kind of a time horizon, I doubt that they'll be in a similar kind of momentum that we used to see earlier. I could be wrong also, but as of now, the indications are in the favor that they might underperform. Selectively outperformance, because the way we are seeing that tax rail, rail tail, uh, yeah, these some of the names wherein we are again seeing traction, but not the entire space. Okay, so before budget, we have already discussed that agri-related sector is definitely looks buzzing. So sugar, uh, pipes, irrigation-related agrochemicals, all these counters are buzzing. Plus, selectively, we can see some of these defense-related stocks which are already doing well. So basically, we have already seen a very strong surge in the themes. Which could be a highlight of the budget also. But not all stocks are participating the way we used to see earlier. So be very selective in this space. So with this, we have answered all the queries. So thank you everyone for joining and listening to us. Next week, same time, we'll connect again. Till then, take care. Thank you.